Profit play wrapped up this morning, 2 for 2. This is the strategy hot streak I'm talking about. 93.5% winners over the last 77 trades live. It's index day trading. Interesting news in the rumor mill that by possibly early 2026, we are going to see pattern day trading rules removed from trading margin. So if that helps anybody out there that has ever been flagged for pattern day trading or frustrated by your account getting frozen for pattern day trading, wondering why, well, if I traded FOREX, I can trade 100 times a day. If I trade futures, I can trade 100 times a day. If I bought stocks, I could buy. If you have a margin account, brokers restrict you to 3 trades a week with a margin account. If you have a cash account, you have the cash to trade, you can do whatever you want. But for margin accounts, for whatever reason, it is one of the silliest rules. I'm hoping that it was a study done by Tasty Trade. I know they've had team members working on it for years and years and years. If this does get approved by probably early next year, removing that pattern day trading could be a big win for traders. So that allows us to trade however we want, whenever we want, all day, opening bell, closing bell, 3, 4, 5 trades a day. Now, again, granted, it's not necessarily going to help people make tons more profit, although it could, obviously, for good traders. But it also might just entail more gambling and more silly trades. So it all comes back to being a good trader, taking good risk, calculated decisions, and just managing and balancing your reward and risk, right? But nice little hot streak. We've had several of these. Anytime I get over 50 or 60 winners and we're averaging over 90%, I'd like to showcase that. Traders join me every single day routinely, and we grind. So today we end up grabbing a first winner in the morning for the first 60 minutes, and then placed a trade later in the day. Grabbed about 70% of that max credit. We do this every single day. I try to trade what I can. I just finished up a masterclass for daily profit play, but 93.5% winners over the last 77 trades. That feels pretty darn good. The last big loss that I took, I lost about $410, and since that point, I made about $4,300. So it's been, active trading. It adds up nicely. Just keep bagging wins. $50 adds up. $100 adds up. Several $100s adds up. Right? Win the day. So it's amazing what kind of profits you can make. But there's a method to it. There's a process. There's math. There's probabilities. There's patience. There's discipline. All these things that would happen. This doesn't just happen by luck. This isn't just a set it, forget it type strategy. I watch this crap every single day and try to find good wins. All right. So I just want to give a shout out to all my daily profit play members, showcasing that. We've got lots of tools and resources we use every single day. I just finished up a masterclass highlighting some of these things with some of these liquidity walls. So ceilings and floors, our potential top of the day and bottom of the day. This allowed us to grab a neutral trade this morning, grab a winner this afternoon, and that's the day. So all good. Do I have anybody that's in the session today that's still holding on to my afternoon daily profit play? Is anybody still holding on to that trade? Potential bottom, it was $1.15. I ended up grabbing about $80 out of that trade per contract. So I'm out, but is anybody holding it to the end of the day? I'm just curious. This is our potential low of the day, and so far so good. It's been contained, but we're hanging out around these 62.95, 62.90 floor. That might be pretty darn safe. So all in all, good. What percentage do you try? That is not the question I answer, Randy. Percentage to try, it's like I don't set those expectations, man. I just trade and the money adds up. I'm serious about that. I literally trade 1 or 2 contracts. My goal is to try to make 50 to $100 these trades. And if I take 100 trades a month, I win more than I lose. I make a few $1,000. And it's one of many. So if I can scale this, I can scale this up for more contracts and I'm comfortable with the risk. I can scale this on multiple accounts. But it's not an expectation thing. I'm telling you, my days of trading, it's not an expectation. I don't trade with the expectation of I'm going to make this much money every single month. And because if I do that, there's all of a sudden this hidden pressure that I have to place a trade and have to make this money, when the reality is I don't. The reality is if I place a good trade and I win or I lose, I will just go find another trade. Because there are times in these markets that are easier to trade than others. There are times when you should do nothing but buy the market. There are times you should do nothing but stay sideways. There's times you should do nothing but sell the market. There's times you should do nothing but hedge. There's times you should do no trading whatsoever, right? But it's getting into these markets on a day-to-day basis, getting a read, getting a sense of what the market can do. It's a lot of experience. It's price action, but there's a bit of a feel and intuition that comes with watching these prices every single day. Now that we're trading, every single day, you get a sense of whether the market's going to do something silly. If the VIX is going off the rails, if the VIX is ripping to the upside, we're probably going to have a nasty time in the market. If the VIX is just tanking to the downside, it's going to be a big bullish day. But if the VIX is just doing nothing, it's going to be a sideways day. Yep. Just went full-time. Why to set goals? I get it, man. I get it. Full-time trading it's always a challenge. I'm hoping if you're going full-time trading, it's because you have the assets where here's what I would say. Expectation-wise, if I can generate with a low risk, if I can safely generate about 10% a year, I'm very happy with that. Okay. Now, my goal is to generate a lot more than that. My goal is to make as much money as I possibly can. And that ends up averaging out to about 19 to 20% a year. That's usually what I'm averaging these last, 10, 11 years of managing some capital, about 20% a year. And I'm doing that with risk-adjusted returns that are single digits. So my risk is, let's say 5 to 8% risk. I try to keep it single digits, but my upside is, 20% a year. And so I do that very carefully, very calculated. It's, trying to trade a lot of high probability income trades. And I'm the type of trader that trades very small, sizes up when I need to, takes more opportunistic opportunities with dry powder and cash at the ready, and trades a lot. I trade probably for one account. For one account, I will probably place, I don't know, maybe 3,000 to 5,000 trades a year on one account. It's a lot of trades. Okay. So that also keeps me engaged with all of my trades and going from A to Z in my portfolio, where not one trade is going to be my defining moment. I've never been a Druckenmiller. I've never been a type of trader that's like, I'm all in on this one instrument and I put my eggs in that basket and I watch that basket very carefully. That's literally a saying. That's a market wizard thing. I don't like to do that, because if I do the wrong instrument, I put all my eggs in the wrong basket. What happens if that basket blows up? What happens if that basket is no longer a listed instrument? That's like obviously worst case scenario, but what do? You don't have a fallback. So, yes, I trade indexes, and yes, I trade individual stocks, and yes, I trade gold, and yes, I trade silver, and yes, I trade the futures market, yes, I trade currencies, and yes, I trade crypto. So are they all intertwined and interrelated? Yeah, they all are parts and facets of the financial markets, but they're not all correlated, So if the stock market goes up, is everything going up with it? I actually listened to an interesting podcast last night. This is a crazy stat. If you look at about 100 years of bonds and equities, okay, who's heard of the 60-40 portfolio? Probably all of us, okay? So that's a 60% equities mix and a 40% bond mix, okay? Now, you might not know this, but over the 100-year window, the majority of the time, they are positively correlated, okay? And the reason this is important is because we have been told for the last 20 plus years that if you keep a 40% bond mix, that's supposed to help offset volatility. That's supposed to help offset some of the risk. That's supposed to be non-correlated to the equities market. That's complete BS. If you look out 90 plus years, they are more than often positively correlated, meaning that if the bond market is going down, the equities market has usually gone down with it. Or if the equities market goes up, the bond market goes with it. We have been in this weird window of 20 years, which right now seems like that's my whole career. I've been trading for 25 years, okay? But most of my career I've seen, well, I understand there's a bond mix, but it's not the bigger majority. Like the norm is that they're positive correlated. So this whole idea of a 60-40 portfolio, I think is complete garbage. I would rather take that 40% bond exposure, get rid of it, and trade gold and trade silver and trade anything else. Okay. Or understand how to manage risk better with an equities portfolio, i.e., hedge. Learn how to trade some simple debit spreads. Learn how to trade some simple, out of the money bear put spreads or out of the money puts, or adding the futures market for hedging. Putting in like simple trades like like a collar trade is one of my favorite, where I can sell a call, collect a premium, get some upside appreciation, but also have downside protection. I can do both, and I can still chip away and lower my cost basis. I hate the idea of a 40% bond mix because we've been in a 5-year bear market. Bond traders, bond holders have probably been super frustrated. And I wonder if they think at some point the bond market's going to recover. I don't know. And it's not really a risk that I'm willing to take. If I had a $100,000 portfolio, I am not going to tie up $40,000 and put it into it's not a risk-free asset. Bonds are not risk-free. Right? Now, granted, you can tie 40% up in treasury bills and T-bills, and you can get the yield on things. Like, that's supposed to be risk-free because it's backed by the government, right? Until they default, if that ever happens. But look, if you know how to manage risk, I'd rather be in an 85 to 90% equities mix that I can trade the upside and downside. I'd rather be in a 60-40 where I have 40% in a mix of gold, silver, and Bitcoin, and maybe some commodities, maybe some energy, maybe some non-correlated assets. Anything is better than watching a 5-year bear market with a bond market that is, if we're lucky, stable. If we're really unlucky, that's going to break at some point. And if you go back 90 to 100 years, they're mostly positively correlated. So I think this throws off the whole idea of being told by financial advisors, hey, if you put this 60-40 portfolio together, that's supposed to help eliminate or reduce a lot of the volatility. I don't believe that at all. 2022 was not a year that you eliminated volatility. 2022 was you were on the hook for a bear market, and you were on the hook for a bond bear market, and everybody felt the pain in every account. Cash accounts, IRAs, 401ks, they were all down on average like 15 to 25%. They performed horribly in 2022, right? Equities recovered nicely. Bond market is still near those lows and still red. So anyway, just thought that was an interesting piece that I picked up this week. I was listening to podcasts last night, and that's a long history to show that they're positively correlated, but we have been convinced and told that just keep a 60-40 mix because it's going to reduce your portfolio volatility. It's not. It's not at all. So learn how to manage risk. That's my 2 cents. Learn how to manage risk. Okay. All right, Rainey, I'm happy to hear that, man. Good stuff. Keep me posted on your needs. If you need anything from me education-wise, let me know. I'm happy to help. Okay. All right. So where are we at for today? We're at 6307. I mentioned this yesterday during the final hour session. Take notes here. Couple key levels that we're still watching. Okay. A couple key levels we're still watching is the high from last Thursday and the low from last Friday. And right now we are now 2 days in between. So this being the high from last Thursday's gap up, this being the low from the push down on Friday, this market was about a 3 1/3% sell-off, about a 4% sell-off in the Nasdaq. But if you watch the high, watch the low, and we're trading in between, guess what that means for us? Right now in August, most of Europe's on vacation. Markets are a little bit more quiet. We could see a lot of indecision happening. We could see a lot of noise in here. I still think the market needs to pull back a little bit. I still think the market, if we're going to have a directional follow through, we're going to come back down to this 50-period moving average. Okay. From there, do we find a low? Maybe, right? Or what could also happen, it just depends. Like, this market can go up, down, sideways in a lot of different ways. But if we break the low, are we going to go lower? Or if we break the low, is it going to return right back and then start to try to find the highs again? I don't know, but I'm paying attention. Okay. I think right now, because we have seen the market grind higher, and I spent a lot of time doing this yesterday, slightly higher, 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 slightly higher. These are all daily candles, right? Slightly higher. And then we peak here and we crash. So all these little tiny, 0.1s and 0.2s and 0.3s and 0.1s and all these little tiny carves of all-time highs that grind. It's pretty easy to be selling premium at tops right now, because I don't think the upside is going to be crazy explosive. I don't think this market's going to have a big blow off top. If it moves up higher, that's fine, but it's going to move up higher, probably steady, slowly, drifting to the upside. Okay, so we had a fast move here, we had a fast move back. Now the market's stuck. So just to recap, let's get our high, let's get our low. It's last Thursday till Friday, and that puts us to about a 3% range. Okay, so that high, you can write this number down, 6427. 6427. This low is 6212. Okay, 6427 to 6212. That's our high and low. Reason why that's important is because if we stay in here for the rest of the week, just an example, Monday is inside, Tuesday's inside. What about Wednesday? What about Thursday? What about Friday this week? If we stay inside, even though we have 1,300 companies reporting earnings this week, we have like 1,270 companies reporting earnings this week. If they're not big enough, like we saw last week with Mag 7, to move the markets, to move the indexes, I mean, the market's kind of priced in a lot of the good stuff. And this is where that summer lull can happen, where August, September, October is usually a pullback window, a pause window, a correction window before the market catches like a Q4 rally. Does that make sense? So if we stay inside this level, watch and see if we get a break here. Watch and see if we get a break here. Traders with me in my daily profit room every single day. I have been focused on primarily just selling premium, and kind of measuring out and mathematically calling my tops for the day. Okay, do I get filled in all the greatest trades ever? No, but I can somehow carve out some good wins, some good profits, some high probabilities. And I obviously size accordingly. Like yesterday was a very close day. If I wasn't managing the trade like I did towards the end of the day, I would have lost $2,300. Instead, I turned around and made, I ended up making about $130 yesterday, which doesn't seem like a big deal, but that's a $2,400 swing in profit. So even though I didn't make thousands of dollars in the upside, I certainly manage risk better. And I'll take that as a big win too. Managing risk, reducing size of losses, and actually walking out positive is obviously a good thing. Okay. I'll take slow, steady grind price action to the upside all day long. Yeah, and the world will too. Look, I'm not going to complain if the market melts up to highs. If the market melts up to highs, I'm not going to complain. Traders with me in my waterfall income service. If the market now is stuck for a couple of days and it maybe even a week or two, what does that do for our trades? We have some trades up here that time is going to help us. And if we have sideways price action, maybe the market goes down a little bit, these become more profitable. And if the market grinds back up, we can possibly have a $2,000 profit trap right here. And again, it's by August and September, which isn't that far away. We're in August. We're going out to the end of the month. So we have like 20 some days left on the trade. Let me go into my SPX position here. SPX. So that was a winner. That was a winner. Those are the two on the day. This one for August. Okay. Right now it's up about 22%. This is only out 24 more days. And the S&P would have to rally 230 points. So we'd have to rally 230 points, which would be about 3.6% from current price. So can we get there in 24 days? Sure, anything can happen. But is there a major catalyst in August after we got through FOMC? We don't have an August FOMC. We got through the tariff deadline, which I don't know if there's extensions, who's doing deals with who, it doesn't really matter. August 1st was kind of a nothing burger, right? We got through the jobs report, non-farm payroll on August 1st. We have inflation data coming next week. If inflation comes in stickier or hotter, I don't know if this market's going to rip higher. If inflation next week with CPI and PPI data for the US comes in hotter than expected, what is that going to do to the markets? At this point, I feel like inflation is back on the radar as a potential headwind for the market, not a tailwind. Okay? But I still think this is a market and an administration that wants to focus on growth. Hey, look, we can grow and outpace inflation. Rather than thinking like inflation is the worst thing ever, we need to tame it. If we can keep pace or outpace inflation, this economy or this administration is going to focus on that more so than trying to cut spending and get deflationary pressures. Okay, so let's actually look at those numbers for next week. If we go to Bloomberg, this should have the year over year for next week. It should be like a Tuesday, Wednesday, Thursday for CPI, so 12, 13, 14. So it should be Tuesday to Thursday next week in the US. Here is Tuesday. Okay. So I don't have any forecasts, but if we look at this box right here, this is CPI for the US. Okay. This is all the data points dropping on Tuesday next week. If we have year over year, the previous print was 2.9. Month over month, core was 0.2. Headline CPI, this would be the big one, was 2.7. Headline CPI was 2.7. That was the previous print, which was higher than expected. So I'm wondering as we roll into next week's trading, what is the forecast? What is the consensus? We're going to find out next week. Okay. So we'll see if this data shows higher inflation numbers again. If we hit core CPI at 3%, that's going to catch some attention. What does that do to bond yields, right? Do we go from bond yields again where they're going to go right back up? We've had a drop of like 30, 40 basis points. Here's the US 10-year yield. Okay, we dropped from 441. I mean, we dropped 20 basis points on the 10-year. Okay, well, here's Liberation Day where we broke the 4%. The whole market went to crap for a couple of days and about 30 to 60 days, right? But we're kind of down near these levels. We're maybe testing Liberation Day lows. Are we going to get a sub 4% 10-year? You know, and this is another thing we have to watch. Right now, August is a zero. It's a 0 month for the Fed. There's no action in August, right? Unless they do an emergency cut, which I don't know if they're going to. They probably won't. They'll probably just wait till September. But this was last September. The Fed cut here and the market didn't love it. The bond yields rallied. So if they cut this September, I'm wondering if we start to push lower, 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 lower. And then as we start to cut in September, the yields go right back up. Okay, which again is not a good thing because you'd want to see that if the Fed is cutting rates. I mean, look, the Fed cut right here 100 basis points. Okay, and look at the difference in our yields. The Fed has cut 100 basis points since last year, and the market is still up with higher yields by about 60 basis points. That makes 0 sense. Fed cuts 100, market's up 60 basis points. Everything's more expensive. You want to buy a car, it's more expensive. You want to buy a house, it's more expensive. Yields haven't come down. Now, we're not putting in like the pain. We're not in like the stagflation mode. Okay. But I think people are making the mistake thinking that this potential like slowdown, this potential stall in the numbers and stall in the economy is a recession. I don't think the U.S. has a recession unless something absolutely breaks. We have to break the consumer. We've got to break the U.S. housing market. We have to break the labor market. Unemployment is still low. Historically speaking, unemployment at 4.1, 4.2% still very low. Okay, if you want a job in the U.S., you can get a job in the U.S. Doesn't mean it's the greatest job. Doesn't mean it's going to pay the most, but you can get a job. Okay, so we still have tight labor. The consumer is pretty darn stretched, but the consumer is still spending because the top 20% are still spending. The top 10% are still spending. The highest echelon of demographics and socioeconomics are still spending. If they stop, then yeah, things will slow. Doesn't mean they're breaking, but people are spending and extending more just to maintain the same standard of living because we have inflation that is now way more noticeable. Prices have gone up. Services have gone up, right? Inflation's sticky in services. Inflation is sticky in borrowing costs. But is it breaking everything? No, it's not breaking anything. So this slowdown is being painted as a recession. It's not yet. Okay, so unless the consumer breaks and just stops spending altogether, unless the housing market breaks and prices come down a ton or rates don't fall, that's going to put more and more stress on the housing market, or supply is so high that it's a supply glut and we have nobody buying homes. Okay, it's a slowdown. Okay, or the labor market breaks where we just see a bunch of people unemployed. We're not there yet. AI hasn't come for all of our jobs yet, so we're not there yet. Right? Okay. And yes, as August prints non-farm payroll, that August 1st on Friday, the jobs numbers was terrible and the revision was terrible. And, Trump's reaction was fire that guy. So we'll see if those numbers change. Do you believe them moving forward? Did I believe them every month, the first Friday of every month? No, I didn't believe them for the last year. I think the numbers are phony. They have been for a while. So again, the U.S. economy is pretty resilient and still is. If you want a job, you can get a job. It's as simple as that. We have less W-2s and we have more gigs and 1099s, but there's still ways to put together and piecemeal a career. A lot of people are working 2-3 jobs, putting together multiple 1099s, being a contractor to make it work, right? If you can balance it, if you can work from home, I don't know. It's like, it's a hustle. It's a hustle economy. It always has been. And more so now than ever before with, dual income families. It's probably not easy raising a family with overextended conditions, right? But I say all that because nothing's going to happen in August, which means the markets could be at a standstill. This kind of slowdown and concern doesn't necessarily break. So we just have like a lull in the markets. A pullback is fine, people. A pullback is fine, right? A pullback in the markets is fine. I personally would love a pullback. Do we get a high, low, lower, high, lower, low? If we get a pullback, great. Everyone's talking about like, oh my gosh, we ran the highs. This is just like 2008. Is it though? I don't know if it is. I think since 2008, I would hope our banks, our financial institutions, our Fed, our government has learned some lessons like, hey, we have the tools and resources to not let that happen again. Granted, the amount of money it would take to bail out whatever is in trouble would be, leveraged more so than what it was in 2008 when we only took a $700 billion bailout. Now it would be probably 5, 10, 15, 20 trillion dollars, which is insane. But that's what would happen. But I don't think it's 2008. I think we have pro-growth, pro-regulation. We're trying to do more with the trade. Like the trade of the world is like abundance and plentiful, and let's do some deals, right? I think this is all a good landscape to kind of shake things up. I think this was a very disruptive decision to throw tariffs out there and kind of shake the world up. But it ultimately led going back to the drawing table, going back to negotiating and figuring out what's good for business and what's good for global trade. And also, it allowed the U.S. to put on a little bit more pressure with what the trade situation is with China. A lot of countries that do deals with China, they end up getting taken advantage of. Typically, China, if you've got a company that's making $5 or $10 million in sales, that's probably replicated and IP is stolen, and your business model exists in China, and it's probably way cheaper for them to run that business. But that's what you compete against. So somehow can we throttle back the surplus that China has? But the one thing China has that we don't is they have a better electricity grid. They have a lot more advancements in AI. They have some of the smartest people in the world, and they have an administration that only cares about the long game, not a 2-year, 4-year political cycle like we have. So anyway, putting a little bit of pressure on China to do a global deal is probably better than letting them just operate on their own. They can't just exist on their own. They need consumption. We are the biggest consumer. They need us to spend money. So, we can say that we starved China. They had to do a deal with us. We can say that we need we needed to buy things from them. They do things that we can't. They do things that we can't. I've said this for years. We have to coexist with China. Whether you like it or not, whatever optics are, China, in my opinion, if you trust the numbers, which is difficult to, but if you trust the numbers, they have some companies that potentially have so much upside, it's silly. I like Baidu. I like Baba. I like some exposure. I like a little small basket investment in China because I think the upside's great. Doesn't mean they're going to be great. Doesn't mean they're going to be awesome. They could totally be delisted if we have additional struggles with China. But I'm hoping that doesn't happen. I think if Western money can flow freely and flow to where money is going to be treated best and some value, I think China's still a good play. But it's calculated risk. Okay? All right. So August, probably sideways. I asked yesterday, let me actually let me capture the poll results. I have about 2,000 subscribers in my Telegram. Let's see what the poll says. Let's go to the poll I posted yesterday around this final hour session. Here we go. So I'm going to vote here. I'm going to go fresh lows. Okay. So 59% votes are in. 59% says S&P is going to reach all-time highs, which again, that was the July 31st high from last week on Thursday. 41% we hit fresh lows, which is August 1st. So I'm hoping nobody got this confused thinking like, fresh lows like April, because obviously I wouldn't vote that either. But I'm saying just in this little range, are we going to take this high out here, or are we going to take this low out? That's what I was asking. So I'm showing 59% of the crowd says we'll take out the highs. 41% says we're taking out the lows. There's no right or wrong answer. Okay. And it doesn't mean that if you voted for the downside and it hits the upside that you're wrong. It just means, well, we'll watch and see what price does. Okay. I would like to see this market struggle or go sideways so I can sell more calls, add more premiums. If we get a better pullback window, I'm going to start deploying more options and cash down here. This is what I'm hoping for. If we don't get much of a pullback, guess what that means? We just go up and we melt up and we melt up and we melt up and we melt up and let this stupid market just keep melting up. I will benefit from it. Okay. I will make higher highs in my portfolio. I will probably cross like the 420, 430 mark for the year. I might push up towards $500,000 in gains this year. Great. But I'm not going to be as active as I want to be as far as deploying capital if we get a pullback. If we get a pullback, I'm going to trade more actively. I'm going to get more cash in the markets working for me. Okay. If we go higher, I'm not going to fight it. I'm going to continue to grind and take good trades like I do and just let the profits roll in. A lot of my trades right now, I'm pretty bullish on my positioning out to the end of this year. If we have a pullback, that is great. I welcome a pullback with a lot of cushion, with a lot of support. And I think we can find some higher lows and this market can still plug away and just kind of do its thing. All this is dynamic support, right? You come back to the 50 period, dynamic support. You come back to the 100, dynamic support. You come back and close to the 200, dynamic support. It's all right there. I'm going to take some bites. If we go to higher highs, fantastic. But let me hopefully get a trade that I can deploy. Okay? Make sense? So do we break the high, break the low? We're going to find out. I don't know if this week it's going to be a big nothing event where nothing happens this week. Maybe this first week where there's no major news, next week is all inflation. Sure, maybe that's the breakout month or the breakout week where we go higher or lower for the month of August. We'll see. Inflation, is it better or worse? I don't know. I don't see any forecasts yet, so look at those later in the week or next week. But that's going to be, it should be Tuesday and Thursday or Tuesday and Wednesday for the CPI and PPI combo for the US. Right? And other than that, August is pretty slow. A lot of the world takes time off. People are still getting in their vacations before school starts. Europe is mostly on vacation through the month of August. So you just have to understand, like there's a seasonality that's probably not going to be crazy aggressive one way or the other. But if you're going to show up and trade every day, watch. There's still ways to grind. Make sense? Okay. So we are down 0.44% today in the S&P. Nasdaq is down about 0.6. We've had about a 4% correction. You can watch these levels too if you want to write this down. This is NDX. I'll go QQQ. A lot of people track the Qs versus NDX. Q's high is 574. So I'm going to go QQQ. So the high at 574.63. And the low from Friday is 551.68. 551.68. Okay. So 574.63 on the highs, 551.68 on the lows. That's the Thursday high to Friday low, a bit more of a range to box in. So I'll go ahead and do this on my charts. I'm going to take a high and a low and box that in and see where price takes us. I can do this on the SPY. I can do this on the SPX. Okay. Take my high, take my low, see where price gets us. It's just an indecision level right now. If we're in between, we grind. If we, try to melt up higher, okay, fine. If we break below the lows, volatility increases, we get a little bit more of a pullback. There's your 50-day moving average. Here's your previous all-time highs, right? More support down here from the 100 to 200 moving average. Lots of levels on the ceasefire gap. Lots of levels in the U.S.-China trade agreement pause back here. So, could we flush down to 600? Yeah. Could we flush down to 590 in an aggressive move and then bottom? Yeah. Could we also just go dead sideways? Sure. I don't know, but I will trade accordingly. Okay. Like I said, wishful thinking is we get more of a pullback, I deploy more capital, and we ultimately find, the resilient pullback that gets us to all-time highs. If we get a pullback that gets us back to all-time highs and then some, that's a fun trade, right? That's a fun trade to be bullish for the rest of the year if we're going to keep going up to all-time highs. It gets a little bit scarier if the market's like, oh boy, now we're down below this like 560 level in the SPY. Well, then yeah, there's a little bit of caution here in the middle. But I don't think this market, unless something is breaking, unless we're seeing like, stagflation / recession, something has to break for us to hit this level and continue to go lower, right? Earnings consensus so far has been positive. I've seen a lot of companies that have been gapping higher. I'm watching earnings every single week. We saw Mag 7 lift. It's 37% of market cap last week. Markets went higher. Yes, they faded on the 31st, but it's like that was a perfect seasonality trade. Top out July 31st. August was a little reality check. We're only down 3.5%. Dow just shy of the all-time highs. Okay, let's see the drawdown here. So from previous highs, this high, Dow pulled back about 3.7%. Okay, so watch the high, watch the low. How about the Russell? Russell pulled back about 6%. Russell pulled back about 6.33%. This actually, I talked about this one yesterday. That was my thumbnail, I believe, from yesterday. That was our hot streak for today. Yesterday's thumbnail was, see if I kept it in here. I just got to find it. It was all about the Russell because I posted a trade in my waterfall income. There it is. This is the subject from yesterday. Is the Russell the best index for the second half of 2025? You know, we're building this. This narrative is like all about bullish hope. The bulls are just trying to run and run hot. AI is the thing. We're going to change the world. Forward guidance is all positive. Earnings are solid. Also, the Fed's looking to cut 3 times by the end of the year. Now, I just read today from Opening Bell Daily with Phil Rosen. He said that according to Morgan Stanley and I think Bank of America, they are forecasting that there will be 0 cuts this year. Well, that's fine from banks that can, post some of the worst forecasts ever. But I look at the futures market, and I think if you're looking at, futures, you're looking at Colshi or Poly market. If you're looking at those betting polls, I mean, right now the probability says 91.4% going into September there will be a cut. That's very, very high. To all of a sudden have this thing change to not see a cut, you're going to see it here in this probability table for the Fed Watch tool. So I think the Fed at least is going to cut 1 time, but it's forecasted here based on these probabilities to be 3, September and October and December. Okay. Does something change that trail? I don't know. Maybe inflation next week, right? Maybe inflation on Tuesday, all of a sudden this percentage goes down? Question mark? Maybe. And how would that be the case? If inflation comes out sticky again and goes up to like 3%. If headline inflation is close to 3%, if core inflation is over 3%, all it shows is we're just getting a reading like this. Inflation's going up. Okay, let's take a look at Trueflation, which is a third-party measurement of real inflation. And I'm going to look at the U.S. aggregate. Indexes pricing, Trueflation UK, that's U.S. index. So 1.75. So we had a bit of a peak back in December 2024. We had a bottom here in April of 2025. We've been sideways. Okay, I don't really see a trend in here that's showing us that inflation is going higher. This has actually been pretty accurate predicting whether or not that CPI number that comes out next week is going to go up or down, above forecast or below forecast. So when it was up here, okay, it was showing that rise in inflation. And we saw that on the monthly CPIs. When it was going down here, we saw that lowering of CPIs. We saw that in the month-to-month news. Okay, we've gone up a little bit, but we have kind of paused off. So unless this goes lower or higher, we will see what next week's inflation readings give us. I will say this. I'll make a little prediction here. If this inflation going into next week is lower, there's a chance that inflation beats. Meaning if it's forecasting for like a 2.9, okay, if it's forecasting for core, okay, actually, core is 2.9. Could it come in 2.8? Sure, maybe, right? But headline is 2.7. So headline's 2.7. If this is going lower, we probably come in 2.6 or less. Does the market get super stoked about that? Maybe, because it shows that the trend is kind of stalling at least for the last couple months because we've been trending higher. Okay, if you look at the, let me go to the economic calendar again. So let's go headline CPI year over year. Here's 2.7. And we'll look at the history. So we got up to 3% in February this year, then down to 2.8, 2.4, 2.3, 2.4, up to 2.7. So we went from 3% headline inflation down to 2.3, back to 2.7. So we're just not getting to that sub 2%. We're not getting to that inflation target that the Fed keeps talking about. And it's exhausting because the reality is we just have sticky inflation, right? Tariffs are inflationary. Prices of everything and borrowing are more expensive. How are we ever going to get to 2% inflation without something deflationary like a market correction that's really nasty, a market, collapse, recession, stagflation, something that the market doesn't like? Then inflation comes way down because people finally tighten up and they stop spending. But right now, if you got it, you spend it, right? And you're just living your life, and whether you're doing fine, you're overextended. 5 years has been a long time for people to be dealing with like sticky, persistent, annoying. We see it everywhere, at the pump, at the grocery store, at services, everything we do, we see inflation. So going from 3% down to 2.3, 2.4 felt kind of nice, kind of. But now we're going from 2.3 to 2.7. Is the forecast next week going to be 2.8, 2.9? Is it going to hit 3% again? That's not going to be taken in well by the market, right? And so even if we're 3% down to 2.3, back up to 3, back down again, that's that transitory inflation that got the Fed in trouble in 2022. Don't say that. Don't say transitory. The market didn't like it. And all of 2022 was a pretty massive deleveraging with that transitory inflation, which ultimately they were right. It was transitory inflation, but it took 9 months to let the markets kind of price that out. Bear market from 2022, January to September before the market bottomed out. And that was actually on a bottom reading of CPI. And then October to December was a rip, and we kind of saw the rally out of that in late 2022. All of 2023 was pretty darn bullish with two big thrusts, broad market. And then 2024 was kind of the same thing, more of the same. And then Trump coming back into the mix as president. Markets got excited about that. And then, kind of the rug got pulled out from underneath everybody when it was all about tariffs and global trade war. Versus now what we have is a tax bill, tax extension, pro-growth, deregulation, which it's like, okay, if we led with that, I feel like the market might have just continued higher versus like the disruption that we saw back in March and April. But it is what it is. Markets are markets. So I'm just curious what next week gives us. It could be a boon for the markets to get back to highs again, or it could be the reason that the market breaks back down for deeper correction. Sticky inflation just means it's probably just going to be exhaustive for it's just not going down. Inflation won't go down. So maybe that sours the mood a little bit for this summer range. Okay. But if we have rate cuts, I think the Russell could be one of the better benefits from that. Okay. If the Russell benefits, I'm looking to see if this is an index that would hopefully catch up and reach all-time highs. So if the SPY can revisit all-time highs, if the Qs can revisit all-time highs, if the Russell can get back to all-time highs, this one has the most potential, right? This is a double-digit gain to get back to these highs. So we would have to go up around 11% to get back to those highs. On an index, that's pretty attractive. Doesn't mean it's going to get there, but even if we go sideways on the Russell, and this is a nice, to me, this looks like a bullish pattern. If this is, a pullback and a cup and handle, how nice would this bullish pattern be? We go up here, we pause, we have this as a big, neckline, and then the market breaks higher, and we measure that move, and the Russell's getting to these highs and possibly higher. So I will go ahead and I'm going to measure this. Let's take this move here. I'm not going to keep a bunch of stuff in my charts, but I'll show you how I measure this. So we'll go from low to high here. Okay. And I will measure, I'm just going to measure the breakout. So if we get a cup and handle, there's our breakout. And I'll measure it from symmetry, but this is going to be my projected Russell way up here. So this will be labeled as a cup and handle projection on the Russell. Okay. And if we have a pullback, then what I'll do is I'll modify this to symmetry. So if we go low to high, and let's say we go high, low, lower, high, lower, low. Well, then I'll take this box and I'll measure symmetry. And then I'll take the box from here and I'll measure symmetry again. So I have a couple levels to watch for. Okay, so let's say we pull back into high, low, lower, high, lower, low. We pull back into here, maybe some potential symmetry, and another pullback into this area. It kind of still gets the same way. It's like, is it going to be a 5-wave move though? If it's 1, 2, 3, do we hit symmetry and then pause at 4 and then get to 5? That would be my measure move to get all the way up here towards 281 in the IWM. I like that trade. I'd be willing to hold the index. I'd be willing to sell a bunch of puts down here to see if I can just generate the income and see this market get back to highs and higher. Okay. But I do think that the Fed has to cut for the Russell to do better. If the Russell doesn't cut, there's too many companies that don't make enough money, that are struggling with high borrowing costs, And it's ultimately why the Russell's been lagging these last 3, 4, 5 months. It did have a nice reflexive rally, off these lows. The Russell is up 32% off the lows, but it's nowhere near the highs because this was very disruptive to small caps. A 30% pullback was way higher than what we saw in the S&P, right? The S&P was down 20% peak to trough. The Nasdaq was down about 24, 25% peak to trough. The Russell was down nearly 30% peak to trough. So it just needed to be a little bit more reflexive. Okay. How deep was the April lows? It looked like 7%. From what level, William? From the previous all-time highs, it was like 20%. So if you're looking at just like the dip from March to April, that was, probably close to 7 to 10%. That was 17% in the Russell. If you go SPY from March, April, that was a pretty violent push. There should have been double digits. That was a 16 to 17% pullback from late March into April. So pretty nasty, man. And I still think it was very self-inflicted. I think the way this was communicated and rolled out was very disruptive. But man, did this market ever respond? Buying the dip there was great. I sold. I bought the dip. It was a good timing indicator with my market breadth measures. But I also just sold a ton of puts and a ton of premium. And when the VIX was up to 50 and 60, I took my chances, and it did pay really, really well through May, June. July was a little bit more of a drift month, but it did get higher. I still just enjoyed the melt up. And here we are like August, September, watching to see what happens. Does it go pullback time? Does it go sideways? We'll find out. Russell, it was like 17% from that March, April. When you started to see like Liberation Day rumblings, it was like 17, 18% of the Russell, which was a lot. Tuesday CPI, yep. So we'll have that next week. Okay. Any other charts, any other questions? So to wrap up for today, be patient this week. Market's been noisy for a couple of days. We had a big fight back on Monday. The market just came right back to lows, found resistance, sold off a little bit today. We still have the highs. We have the lows. Watch them. Are we breaking the highs? Are we breaking the lows? Are we going nowhere? Tomorrow might be a big nothing day as well. Watch your levels. No silly risks. Okay. Volatility is elevated a little bit. IV ranks have changed slightly, but not a ton. I had a good trade on Friday. Let me actually see what that trade's doing right now. If I go SPY, just one trade I took on Friday. This is so I pulled in 505 credit. It's already up $90. Not bad. It's already up, 19 or 18%. I obviously want to make a lot more than that. This is back down towards those April lows. So a naked put, that's up around $337. It's only half of the profit. I pulled this again. This is during April. I said I sold a bunch of puts. I did. This is back down to April lows. This is going to be a break even at April lows. Okay, because I would own it at $490. I'd get a $5 profit trap plus the $5. I'd own this thing below $480, which is below the April lows. So if I'm owning anything, this account with 364K can potentially have 200 shares of the SPY at a $480 break even. I would take the trade, I would take the shares, and I would repair it. But I don't think it's going to get there, and I think ultimately this is just going to be like a $1,100 winner. And I just add it up on 15 accounts and just keep grinding. Okay. All right, good stuff. Okay, we finished right around 6,300 today. 6299.19 is my finish. Tail of the tape says this. S&P down 0.49%. SPY down 0.51. NDX 0.73 to the downside. Q's 0.68. Dow at 0.15 red. Russell is up 0.5% at 0.52. The VIX actually was up slightly on the day. Bond volatility, let's move this back to the VIX. Bond volatility move index, I like to just see what that's doing here. We're up slightly. Dollar index, just a wild week last week on the dollar. Came up to 100 and change, just punished on Friday, and we're just kind of stalling from here. I still think the dollar can get up into 100 plus, 101, 102. If that's the case, I do think there's a bit of a risk-off tone if the market does that, where the dollar's up, the bond market's up, and then maybe equities are going to take a little bit of a correction. Oil, oops, I want to sell that. Oil back down to 65. Let's see what happens here. Probably just a bunch of noise at 65. Natural gas, just can't catch a break. I'm just actively selling calls on my diagonal. Gold, haven't reached highs again, and just sideways, tons of consolidation on gold. I think gold is a great trade to be long, but I'm trading a lot with options so I can get the cushion. If I'm going to own gold, I want to own it at the prices at like 3,000, if I can own gold at 3,000. So that spot price is here around the 280 handle, around 280 on my GLD if I'm owning shares. Silver, nice pop off of silver. Silver futures. I did post a trade for silver futures. Should be in right here. SI futures. This is Project Options Edge. Up a few bucks, but this should be good for like a $200 winner. So I'm going out to October. Should be good for about $200 a profit. And I just need gold to stay, or silver to stay above $33. So if silver future stays above 33, I'll be in good shape, which is back down to this 200 moving average. Bitcoin, back down to a 50-day moving average. Dynamic support, all right here. We could still pull back in Bitcoin to find some support. We could also just use this past resistance to work its way down, work its way down, work its way down, and then rally from there. Stop loss below. Try to get the new highs. I think also when the Fed cuts, I think Bitcoin goes higher, gold goes higher. It wouldn't surprise me that there's going to be some consequences on cutting rates and having a rate cutting cycle coming through the end of 2025 into 2026. Dollar gets weaker, bonds get weaker, equities still rally, Bitcoin still rallies, risk appetite still prevails. But that timing might be chop until September, rate cut, then the market start. That's like our next big reaction in the markets. Okay, MicroStrategy. Off the highs at 456 all the way down to 375. That's pretty nasty. That is a drop of around 19%. I don't think Bitcoin has had that pullback. Bitcoin from this high to low is only down about 8%. Well, that's about right. MicroStrategy is like a levered proxy for Bitcoin. Coinbase, all the way up to 445. Look at this thing drop. It was ripping on that stablecoin news. This thing has been crushed to the downside. 33% down on Coinbase. Ethereum took profit at 29. I still like this trade if we get a pullback into like 3,100, 3,000. Buying Ethereum, looking to get back to like 4,100. Copper, crazy wild stuff. If it holds like 4.4, 4.3, maybe some support in there, but be careful, man. Copper was wild last week. Anything else? DAX, just off of highs, maybe some pullbacks here. FTSE still pushing all-time highs, waiting for a pullback. Brazil, sideways. Latin America, sideways. Hopefully get some buy zones here. Mags, right like the indexes, high, low, trading in between. If Mags breaks lower, market's going with it. So if we break this low in Mags around 56.50, we're going lower. Apple, down slightly. Amazon, big drop last week. Broadcom, still sticky around the highs. Google, hanging in there. Meta, at highs, fading. I should have sold a freaking bear call spread up there. Microsoft, off the highs. I'm going to look at a trade for Meta tomorrow. I think that's a good looking like call condor or something to kind of get this high. I could be wrong, but I think that's a pretty good trade to see this thing fade. Netflix, Nvidia, maybe another fade in this one too. Maybe. It could be the dumbest trade in 2025 is trying to short Nvidia, but at least for defined risk, it might be okay. Tesla just selling a bunch of premium. Berkshire, way below the 200 moving average right now. I'm going to stay out of this one. I did get a pop on UNH today. It's up to 251. I'm not excited. I just want to see. I've got a break even here of around 250. So if I take any ownership on UNH, it's going to be out in time. I haven't been assigned yet, but UNH is here. I have a ratio 270 by 260. I pulled in 622. It'd be a 260 assignment minus 622 minus 10. I'd own the shares at 243. So even right now at 250, I still make money on the trade. So if we just stay here, I'll be fine. I'll take the assignment. I'll flip the shares. I'll still be fine. But we'll find out. If UNH can stop bleeding, and this is like an oversold, this low is oversold, we come back up into this level, this ratio spread actually might work out pretty well. We'll see. All right, I'll let you go. Have a good rest of the day. Come back and join me tomorrow. A couple things, just a shameless plug here. Classes and services. I trade the indexes every day. I trade the indexes every week. This week, I put on 9 trades today for my newsbreaker service. Double ups. I'm watching for some high probability. I'm looking for good liquidity flows. I'm looking for high reward, low risk trades. Scanner. I've got a scanner that I built that's finding me good volatility plays. How to hedge your portfolio And if you're a little bit more advanced and you're comfortable taking a variety of strategies, that's kind of my kitchen sink trading service, right? I do like the way I trade for clients, the way I trade, like, a variety of strategies, all encompassing. Project Options Edge is kind of the kitchen sink course. These are just educational courses. You want to get started on some options, make it very straightforward. Get rid of the silly jargon, the silly names and strategy stuff. Get right to the point. $27, get the quick guide. Okay. If you have any questions on these, you want to join these services, you can give us an email, support@prosperitypub.com. Okay. My daily sessions every Monday, Tuesday, Wednesday, Thursday, Friday start at 9 a.m. We jump in, we grind, we find some trades. Tomorrow's going to be Watch This Wednesday. So we'll pull up the pinch point scanner, try to find some trades. I'll price a couple out. We'll go daily profit play, see what we can find. All day, every day. Okay. All right. You're welcome to join. I'm going to share this link in the chat. I've got a couple links here that I'll post. I will share my Telegram, my Discord, as well as if you want to join me for the daily profit plan, you can opt in on your phone. So let me go here. Okay. So daily profit plan, Monday to Friday, 9 a.m. Eastern time. Okay, there's a link for that. If you'd like to join my Telegram, again, free to join. Just I'm posting, 90% of this channel is me, and then my team will post like links and alerts and things like that. But most of the content is mine. So I'll post this here if you're interested to follow. Chris Pulver Telegram. And then my Discord, this link's going to be good for 30 minutes. If you come into my Discord, just please read the rules. It's like thread number 1. I don't have a complicated Discord. It's just a good place for me to put all my links, all my content, to keep everything, so I can communicate with everybody. 30 minutes. Copy. Okay. Is the Chris Pulver link the Telegram link for newsbreakers? No, the Telegram link is for my general public Telegram. So the Telegram link I posted is this one. Has all my followers. Okay, I have all my content. Like I post, daily profit play. I post alerts for newsbreakers. I get a list of the stocks we traded for my class. This is like every class gets touch points in this public channel. If you're in the newsbreaker service, you're going to have the tracker, the live trade sessions, the class recordings, like all that's in your classroom, right? So between Telegram and Discord for everybody, like I said, please read the rules. I don't send direct messages. I don't send friend requests. If you want to contact me directly, go to the free group chat and find me. This is me right here. I talk to everybody in public. Forex, stocks, options, futures. If I post any video, I do a lot of videos on TradingView. I post them here in the analysis section. Okay. If you want to work with me up to 1 to 10 traders, I do workshops for 1 hour, 4 hour slots. I do a lot of one-on-ones and up to 10 if you want a small group to get together. I'll do some private instruction. We'll talk whatever you want. And then affiliates and discounts. I've got a lot of connections in the industry. I've been in this for a long time. So if you want some discounts, some good software and tools like every single day, you can come into this affiliates discount. So check it out. But if you want to reach me, best place to reach me is right here. Or come to my sessions live. Okay. All right. Sounds good. All right. Thanks. Tomorrow morning, daily profit plan, 9 a.m. Eastern time. Come in and join. Free for everybody. Come check it out. All right. Have a good rest of the day. See you tomorrow. Bye.